I won't sell until 150. You heard me right. 150. And before you call me crazy in the comments, let me explain why, and more importantly, how you should be thinking about when to take profits. But before I go any further, let me make this clear. Rick Rule is the godfather of resource investing. That's why I call him my Uncle Rick Rule. And if you've been around Stackers for a while, you already know I worship the ground he walks on. I'm very confident few people respect and follow him as much as I do. We're all better investors because of what we've learned from Uncle Rick. So when I say dead wrong, it's not about my Uncle Rick. It's about how you and I could be dead wrong if we just copy his moves without understanding his context. Rick Rule shook the whole metals world when he said he was selling 25% of his portfolio. OMG, you should have seen people lighting up the keyboards. What? How could you sell now? Uncle Rick, what are you doing? Rick isn't wrong. In fact, his logic is airtight. He's talking about liquidating positions he bought for stupid cheap and probably with warrants. So for his particular situation, selling 25% is genius because he gets all of his capital back and rides the other 75% of his portfolio for free. Again, this is brilliant, if not a boss level move. But here's the thing, if you and I try that exact same move without Rick's cost basis, without his decades of positioning, we can be sabotaging our own stack. Traditionally, I am a true believer in the same approach. As the saying goes, you can't go broke taking a profit. It's all about getting your money out of the investment as quickly as possible. But here's where I differ. Not because Rick is wrong, but because I'm not Rick. Neither are you. My goals, my temperament, my cost bases are different. So are yours. And that's why I'm not selling to 150. And I'll share my logic right after I say, what is good, Stackers University? It's so wonderful to have you here with me today. We've got a lot to cover in this video, so hit the like button for me while I give a quick shout out to a new channel partner, investing.com, and their tool I use almost every day, investing.com Pro. I'm super excited about this partnership because I've been using their platform for a little while now. It's the one place I can go to track metal prices, ratios, and my mining stocks, plus read the articles and research that fuel a lot of the videos we do here. If you want to use the same tools that I use to break down the markets, check the link in the description. You'll even get 15% off. So is taking profits a bad idea? Well, it really depends. No, not those depends. It depends on a number of factors. In my opinion, too many investors treat investing like it's a game of hopscotch, jumping from one idea to another, often chasing price. Or they sit back and endure the investor roller coaster ride. We all know how the ride goes. You hop on, scream out your lungs during the ride, only to hop off right back where you started, broke and dizzy. That's not wealth building, y'all. That's Six Flags, and I'm not in this for the ride. I'm in this for the win. So why am I not trimming like Uncle Rick? Because I'm not Uncle Rick, as I said. Let's be clear. Rick Rule has more money than he knows what to do with. It's not like he's out here trying to make enough money to buy a new Ford Bronco. He's doing this because he loves the game, and honestly, the game needs him. Rick is doing what we all should be doing, investing based on his personal goals, his temperament, his risk tolerance, which is different for all of us. I can't tell you what to do any more than he can, but I can break down the 4 reasons why I will not sell or start thinking about selling until silver hits $150. Now, notice that I'm talking about silver and not my gold. That's a completely different conversation. Also, I'm not pulling $150 out of nowhere. Some of you remember the video where I showed you this slide that shows the average return on silver during bull markets is 413%. So if you use $30 silver as the breakout price, that equals $153. That's also in agreement with this chart that I've shown you before, where you can estimate silver price based on the price of gold and the gold silver ratio. So take a screenshot of this because there's a lot to digest in one quick look. Now, reason number 1, bull markets are rare. If you're lucky, you'll see 2 in your lifetime. I refuse to fumble this one away, especially since we're catching the absolute beginning of this market. Number 2, as I shared, I'm not here for 40% gains. I'm here for 400% gains. That absolutely means I had to be mentally prepared to endure pullbacks of 40 to 60%, which is very normal during bull markets. These pullbacks are designed to shake out weak hands. And in my last point, I'll explain what makes it easier. Number 3, in a bull market, the real money is made by riding the whole move, not by trimming nickels and dimes on the way up. You don't win championship taking players out of the game early. It's like watching the end of a football game and the team is leading and they start to play some form of prevent defense, only to lose because all the prevent defense does is prevent you from winning. Somehow they find a way to snatch defeat from the jaws of victory. So when it comes to investing, I'm not switching to a prevent defense. I'm staying on offense until the clock runs out. Because in a true bull market, fortune doesn't reward the cautious, it rewards the committed. The big money isn't made by dodging dips and calling tops. It's made by having the courage to stay in the game when everyone else is trying to play, not to lose. You don't build wealth by trimming your winners too soon. You build it by letting the entire move play out. All right, Stackers University, I got to let you in on a little bit of secret. I've been working for the last several months on a very secret project, and I'm so proud to announce to you that I'm releasing my book, The Beginner's Guide to Growing Wealth and Investing, Planting Seeds and Growing Riches, on November 3rd. And I'm looking for 20 people to be a part of my advanced reviewer copy team, where you get a copy of the book in advance, you get to read it, and all I ask is that you give me an honest review on release day. If you're potentially interested in that, the link is in the description. Sign up and help support my latest creation. Point number 4, consider your cost basis. This is a mentality shift for most. Many of us bought silver all the way down through the low 20s. We literally are buying the bottom of the chart. So if the market has one of those typical bull market pullbacks up to 60%, you're likely still to be in the green. This should give you peace and make you less likely to panic. The key is to remain emotionally unengaged. That will help keep you from dumping the bags at the bottom. That's the hidden part of Rick Rule's move, that his cost basis is fortress level low. And so as I wrap up, $150 is my mental number, but in reality, I'm really going to be making my decision not based on price, but based on conditions. And here are the 4 that I'm looking at. I'm watching things like the anatomy of a bubble chart. When you see that mania phase, that new paradigm, everyone's saying silver's going to infinity, and your Uber driver is telling you to back up the truck, we're close. Time to start selling. The valuations on your miners, when the PEs are so wild that they stop making sense, time to start selling. The sentiment, when silver's on the front page of Forbes, CNN, TikTok influencers that have never touched a coin in their life suddenly start screaming, buy silver now, that's mania. Time to start selling. And here's the one you got to tattoo on your brain. Being overbought does not mean overpriced. Don't confuse hype with value. Mania is when price finally detaches from the value. That's time to start selling. Here's the bottom line. Rick Rule trims because he already won. He's cashing in chips with a smile. Me, I'm holding because I want to maximize how I ride the whole wave. We're different players with different playbooks. You have to have your own playbook. Now, here's what I want to know. In the comment section, what's your strategy? Do you plan to trim like Uncle Rick, or are you holding until the mania phase? Are you looking to get a few more buys in before silver hits $50? Or you can simply put an A+ in the comments if you love stacking, want to show me some love, or if you want everyone to know that you always stack smarter and never stop learning. All right, folks, that brings me to the end of the educational portion of the video. And now I want to say thank you to StreamX for sponsoring this part of the video. This video is being disseminated on behalf of StreamX, NASDAQ ticker STEX. When I first heard about StreamX, I'll be honest, I wasn't sure I understood the value. I've seen a lot of fintech pitches that sound good on paper, but don't really deliver in real life. So I actually reached out to my friend Lee Organs, and the conversation I had with him is what flipped the light switch for me. He said, think about Blockbuster versus Netflix. Same content, movies, but one made you drive across town, pay fees, and return the tape. The other gave you 24/7 instant access from your couch. That shift killed Blockbuster. That's the same disruption we're seeing in gold. The ETF model is the Blockbuster model, and StreamX is the Netflix. Here's the thing, ETFs made gold investing easier in the 2000s, but we all know they got problems. They charge fees, they don't pay you a yield, and most of us don't trust or even really like ETFs for a variety of reasons. At the end of the day, you just don't own the metal, you own a paper promise. Now, you've heard me talk about monetary metals before, and I'm actually in their silver bond right now earning 12% interest, which is paid in silver, so I receive 120 ounces a year in yield. And as I've shown in previous videos, when I redeemed 90 of the ounces to prove it, that's why StreamX caught my attention. They have an exclusive partnership with Monetary Metals to launch the first ever yield-bearing gold token. What's really interesting is that this token offers up to 4% yield paid in gold, fully backed, vaulted, and audited. You own it 100%. It's not some IOU, it's redeemable. You hold a certificate of ownership on the blockchain. This has the potential to render traditional ETFs useless. On top of that, it starts to destroy the argument of gold being a pet rock that doesn't earn or pay interest. And here's the important detail: this isn't about us mailing in our gold or silver like I had to do with the monetary metals. This is about investing in the company StreamX, ticker STEX on the NASDAQ, as they are pioneering this model for the global market. They're building the infrastructure to make yield bearing, fully backed tokenized commodities accessible worldwide. This is really exciting from where I sit. And they're not doing it small. Billionaire Frank Bustra, who built Goldcorp and Wheaton Precious Metals, owns 17 million shares. Mining legend Sean Rosen, the man behind Osico, is backing it as well. Their chief investment officer, Mitchell Williams, used to manage billions at Oppenheimer. And they've got over 1.1 billion in credit from Cantor Fitzgerald to buy vaulted gold. That's serious institutional firepower. And let's zoom out for a second. Robinhood's CEO just said tokenization is a freight train that's going to eat the financial system. And he might be right. Robinhood is tokenizing stocks. StreamX is tokenizing gold. And gold isn't a small market. It's a $24 trillion market with less than 0.1% tokenization today. That's the real opportunity. So here's the bottom line. If you don't trust ETFs, if you don't like paying fees for gold that just sit there, StreamX is building the alternative. Fully backed, audited, yield bearing, redeemable. You own it 100%. You own it 100%. StreamX, ticker symbol STEX, is the company leading this charge. Please make sure you do your own research for StreamX. And thank you again for StreamX for sponsoring this part of the video.